Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event. Hello, everyone, and welcome back to Earmark. I'm Blake Oliver, joined today by Noah Buxton, founder of the network firm, co-founder and CEO of the network firm LLP, and an expert in digital assets. Noah, welcome to the show.
Thanks, Blake. Thanks for having me.
I got to start with the number one digital asset in the news in the world, and that is Bitcoin. The Bitcoin price today is, as we record this in December, 101,000 United States dollars. That is wild. Did you ever think we'd be here, Noah?
We picked a good day, to be here. This is, I guess, a little bit of my I told you so moment. So did I know we would be here? In one way or another, yes. It took me a while to figure that out. It took me a while to get there, to go down the Bitcoin rabbit hole, as people like to say. But yeah, once I sort of understood the technical mechanics, I understood the macroeconomic aspects of what Bitcoin could be. And then I thought additional adoption seems probably more likely inevitable than not. I thought, yeah, we'd be here roughly.
I'm so grateful to be talking to you because I have been a Bitcoin skeptic for years and years. And I still call myself that, even though I see that price. I just don't get it. So I'm hoping that maybe you can change my mind, or if not, we can at least have a discussion about it, and I can understand more about the point of view of the Bitcoin believers, and understand this price. And I guess I should start with my question, my big question, which is what is there that about Bitcoin specifically that justifies any price? Because it's not that I don't see it having value. I first heard about Bitcoin when it was like $1, and I bought some Bitcoin when it was $250. Then I sold it after I made a good amount of money on it, because I never felt like there was, I never believed any of these arguments that it was going to replace money as we know it today. And so I still feel that way, even though I see the price, and maybe I have a little bit of FOMO about not holding until this price. I also feel like the price could be 100,000. It could be 1,000. It could be $1. It could be $0. It could be $1 million. I don't understand why it should be what it is today. Why, other than speculation, which is what it feels like there is a ton of.
Sure.
So can you help me understand this?
Yeah, I'll try. I think, look, first on the skepticism point, that's not an unfair place to start. I think in the accounting world, professional skepticism is actually a really big component of what we do, especially if you sit on the audit side. You're probably naturally inclined to be a skeptic. So I think that's a totally acceptable starting place. Can I convince you today? I'm not sure I can. But when I said I went down the Bitcoin rabbit hole and I understood some of the macroeconomic aspects, I would kind of lean there, right? I think that's the important part to start to grapple with, where people can eventually reach maybe an aha moment. And that's basically what happened for me. So when I thought about the history of money, that really led me down a path to learning more about even what I'm even doing in this accounting space, right? It helps contextualize what we're even doing here generally. But then I started asking myself, like, are seashells valuable to me? Is gold valuable to me? Do I want gold? Do I want seashells? Do I want rice and grain? These are all commodities essentially, right? That people have used to serve the function of money at some point in history, in our human history. And so, is any one of them better than the other? That's really not the starting place. The starting place for what is something that can act as the function of money is to look at the qualities of money and to look at the purposes of money, right? So money is all about, can it be a unit of account, a medium of exchange, and a store of value? So if you want to have the real conversation about Bitcoin, that's where we need to start. Now you think about, okay, those are the functions of money, but what are the qualities of a good money? Well, I didn't prepare for this, so I'm on the spot. There's 10 or so, right? But there's the durability of it. There's the divisibility of it. There's the acceptability of it. It goes on, right? But basically, you can start to think about all of these things like seashells, or
which were in history used as a form of currency,
exactly
a store of value, right. a way to a
yeah.
form of money.
Exactly. Anything that's not a barter transaction, right, needs some unit of account and some medium of exchange, store of value, right? We're essentially abstracting barter transactions through a currency. Now, to your other point, can this actually be a money? Can it be, right? I think today, if you look at Bitcoin, you would say, actually, no, it's not necessarily a currency or a money, right? Is it a store of value? Well, certainly for people that held maybe a little bit longer than you, I would say that's a store of value. Is it a medium of exchange? Well, certainly you can transact in it anytime you want in a self-sovereign way across borders. And so, I mean, it's pretty good, way to transact, but is it widely accepted? Is it a way that you can sort of, just like you can with a dollar bill or a credit card transaction, show up just about anywhere and buy a good or service? No, not necessarily. And is it a medium of is it a unit of account? Again, people don't account for things in Bitcoin today. So as a money, it doesn't stack up great. And so the narrative around Bitcoin has changed quite a bit over the years, right? It used to be, hey, this is going to be the global currency, right? This is going to replace money.
Right.
And that's evolved to actually be what I think is more an honest and more honest reflection of what it is a digital commodity. And so do you hold gold? Do you hold gold bars in your house? I'm not asking you personally, right? This is sort of a rhetorical question, right? But do we hold valuable
buried
commodities?
In my backyard, perhaps?
Yes. Or at an offsite location, right? Highly secured. And yeah. So, we invest in assets, right? We try and protect wealth for our families in many different ways, and people have their own perspective of how to do that.
Right.
And Bitcoin for some people is a way to do that. It's a digital commodity that can act as a store of value.
So I agree with you on that. It's a unit of account. I mean, it could be used that way. Because there is a certain number of Bitcoin. It will cap out eventually, and it can be divided.
Yes.
Many decimal points, enough to be used as a unit of account. It can be used as a store of value, and people are doing that, although it is extremely volatile. So that makes it difficult to use as a store of value. And people tend to forget like the massive drops that we have had in Bitcoin over the years, giant plunges in the value of it. So like I wouldn't personally, I look at that history and I don't think, well, this is a great place to save, to store my money.
But like with anything, right? You're not 100% invested in Tesla stock, and you're not 100% only in cash, right? So there's always some idea of diversification here too.
And I think the one I have the biggest problem with, and this is why I ultimately decided not to invest in Bitcoin, was I saw for years people promising that it would become a medium of exchange,
Mm.
and it clearly hasn't. And I don't feel like it will,
Mhm.
because it's very inefficient. It's a really inefficient medium of exchange,
Yep.
except for very large transactions. It's very expensive for small transactions, and it's very inefficient. And people have
Mhm.
talked about like the energy usage of Bitcoin now exceeding
Sure.
those of
Yeah.
entire nations. So there are alternatives for medium of exchange that are like much more efficient. And there's also alternatives for it as a store of value that are much more durable, such as stable coins that are
Mhm.
pegged to the US dollar. Like, you're much safer storing your money in USDC or even Tether than in Bitcoin, because those are
Yeah,
pegged to the dollar.
maybe. Yeah, there's a number of things you brought up, but on that store of value point, right? Like a stable coin, right, there's a number of types of different stable coins, but just for the quick educational point for folks that aren't well versed in this, stable coins are an invention of crypto. And essentially they are a token that runs on a blockchain, and the fiat backed or centralized fiat backed stable coins essentially make their promise to stay at a dollar value by having a reserve of assets, dollars or treasuries, cash equivalents, essentially at the same number, right? So the same count. And so they maintain a peg at a dollar. The store of value point, though, is actually, I wouldn't say that cash is a store of value, and therefore I wouldn't say an abstraction or a derivative of cash, a stable coin, is a store of value either.
I mean, that's what people do with like money market funds. The safest place to put your money is in US government bonds right now. That's what the world uses for its reserves.
Yes, yes. So I think it's
Yeah.
all viewpoint dependent, right? Facts and circumstances matter. For me, of course, yes, some of my savings is liquid, and some of my savings is not as liquid. And so, what I meant about the store of value point is really more about the interplay with inflation, essentially, right? The purchasing power of the dollar, essentially, going down over time. So a stable coin is going to effectively have lower purchasing power over time as well. Whereas they argue one of the qualities of money that I forgot to mention, which is really important for Bitcoin, is the scarcity aspect. So a money to be, to serve the function of money, or let's just say a digital commodity, even an important point of that is scarcity. Gold has long been, a store of value in investors' minds because of its scarcity, and then because of its also relatively predictable emissions or inflation rate, right? So the price of gold, of course, the supply of gold has some relatively predictable emissions or inflation in its total supply because of how much is mined, right? How much extractive activity happens each year. And that's what Bitcoin's code sets is sort of a digital proxy for that. It sets this emissions or inflation rate. So Bitcoin is inflating its supply, but only to a fixed cap.
Right. And so the idea is that because it has this limited supply, that we don't have the inflation we have with fiat currency. But at the same time, Bitcoin is not a productive asset. And there's a famous video of Warren Buffett talking about how if he could, he certainly has the funds to do it. He could buy a lot of Bitcoin, but he
Right.
hasn't done it because he'd rather buy farmland. He'd rather buy businesses. He'd
Yes.
rather buy productive assets that deliver a return. And Bitcoin does not produce a return. So unless you are betting that people will continue to want to pay more than you for Bitcoin, there's no reason why it should continue to increase in value.
Yeah, right. And again, I think that people should consider Bitcoin in a larger context of ways that we try and protect wealth, right? And so it's not Bitcoin 100% and nothing else, or vice versa. I don't think for anybody, right? If Bitcoin isn't in your ideal portfolio because you don't necessarily believe, let's say that it's a productive asset, or many other things that you might believe about it, that's totally fine. But it is interesting to look and just make an analogy to our public markets, right? Our public markets have largely been thought of as a way to protect wealth. That's where the vast majority of retirement savings goes, into mutual funds and into our public markets. Is Peloton a productive company? Well, certainly they have intellectual property. Certainly they produce goods. Certainly they have subscribers and technology. They have revenue, right? Is their price to earnings ratio make any sense? No, it doesn't. Do most of the public companies' price to earning ratios make any sense? No, they don't. Right. And that's because the similar market dynamic that Bitcoin has. We have demand coming in, right? And only a certain number of sellers. And what happens? The price goes up. So I think that the public markets sort of you exhibit a lot of the same dynamics that a digital commodity market like Bitcoin exhibits too. That's in place in any security, any financialization, essentially.
Yeah, but that doesn't convince me that I should buy Bitcoin. It just convinces me that I should be on a better, I should be on the lookout for better assets to invest in that are productive.
Yeah, and I wouldn't. I would only convince you. I'm not here to sell anybody Bitcoin, right? But I would say, if over the last 10 years, on a risk-adjusted basis, you looked at Bitcoin versus every other financial asset, whether property, commodity, or financial asset, it's had outsized returns. So will that continue forever? I don't know, but I can tell you over the last 10 years that if you'd said, you know what, I'm not sure I fully believe in this Bitcoin thing. I'm not sure it's going to play out the way they say it's going to. Although there's no they really, it's just a decentralized market that determines how this happens. That you'd probably be in a pretty good place for doing that if you said 1, 2, 3% of my total earnings, or if I did a very low risk sort of way of investing of saying I'm going to dollar cost average a couple $100 here and there.
Right.
You would have outperformed your stocks. You would have outperformed your retirement. You would have outperformed the rental real estate that you bought, etc.
Sure. But again, that is based on historical trends.
Oh, hindsight is 2020.
Right. And we all know that just because something happened in the past, there's no guarantee that it will continue in the future. So what I'm asking for is for someone to explain to me why it will continue to go up forever. And why, if I buy Bitcoin at $100,000, you know, what is the first principles type of argument to support that valuation?
Well, I think is it first principles? I'm not sure, but I think the reason that it goes up forever, again, I'm not sure it goes up forever. Will it be generally an asset over time that protects wealth? I believe it will be, and that's because of looking at essentially the fiat system, right? The fiat system is not something I'm trying to tear down, right? There's Bitcoin is not a monolith. The people that are in Bitcoin are not a monolith, right? There is a segment of this market that is very anti-establishment, and Bitcoin, again, is supposed to replace all money. It's the new world reserve currency, right? So I'm not making that case, but there is somewhere in between that more extreme case and the other extreme, which is, hey, look, fiat systems, every one that has happened, every fiat system in history has broken eventually. And how does it break? It breaks by runaway inflation. Now, can Bitcoin be a 100% solution to that? I think that it's the only asset, arguably, that's not connected to that fiat system so directly. So, that's
this is interesting what you're saying, right? So, and I agree with you that every fiat currency in history, over the long run, every empire, from the Roman Empire to the British Empire, the Spanish Empire, the Netherlands, they have all fallen victim to inflation. Overspending, taking on too much debt, increases inflation to a point where the currency, people stop relying on it, right? And some other currency becomes the global reserve currency. And currently that's the United States. And we shouldn't expect that to change. And we see debt levels increasing in the government, and our politicians being unable to or unwilling to fight that, right? And so we should just simply expect that we will continue to spend and we will accumulate debt, and eventually something will happen, and the US dollar will not be the global reserve currency anymore, and something else will replace it. I buy that. But will that be Bitcoin, or will it be something else?
And no, I think it's the next. It's the next productive economy. It's the next place that other nation states can store value, right? Because that's why we're the world reserve currency, right? Is because that we have a safe, legally bound framework and markets, right, where other countries can invest their assets.
And we've got like a dozen aircraft carriers positioned around the world to
And there are-
maintain our dominance.
Yes,
Right. It's
exactly.
the U.S. military ultimately is what backs up the value of the U.S. dollar.
And it's all about relative strength. I think we are going deep. This is awesome. This is why I like your content, because you're a good conversationalist and it's natural. So I'm probably going to miss some points here.
No,
the Bitcoiners will be mad at me, but I do think that it's a measure. It's a measure of relative strength. We're talking about a lot of intersections here. We're talking about national security. We're talking about macroeconomics, right? But as you see, the rise of China, the interest in Asian economies building their middle class, these become safer places for emerging market countries, right, to store their wealth, right? And so you see BRICS gaining power. And I think that Bitcoin is actually very interestingly, and even let's just set Bitcoin aside for 1 second. There's another innovation in crypto, which we already talked about, stable coins, which is a very, very powerful way for the US to maintain global dollar hegemony, dollar dominance, being the world reserve currency. And that's through distribution of our dollar, right? And so this has been the history over the past 50 or longer years of Eurodollar markets, right? We're essentially creating bridges for the dollar into the furthest market that we can, right? And this means that people abroad can save in US dollars or save in a proxy for US dollars. Stablecoins completely opens up that capability for people to hold stablecoins. And again, in this fiat-backed stablecoin market, what they're doing is essentially the issuer of the stablecoin is now holding more and more treasuries. So stablecoin issuers are actually the 16th largest, I believe, holder of US treasuries. And this was just a few months back. The statistic is aged a bit. Yep. It's probably even better now. And that's a great way to distribute the dollar. So in conjunction with that, or maybe separately from it, can Bitcoin be a store of value or a reserve asset for the individual or even for the country that can in some way protect against the ills of inflation or the eventual breaking collapses that are caused by inflation? Maybe. We have yet to see that. So can't tell you yes or no, but I think that it has the actual qualities that it's possible. It's a digital commodity. It's not tangible. It's hard to get your mind around, but it's possible that
it's just a string of code. It's just a key, right? So
with no known person, with no CEO, with no government, with no politician, globally distributed and run in a globally decentralized way. I think that's a quality that we have yet to see in any technology, in any financial asset, anything in the whole world. And that itself, that one quality itself, its decentralized nature might actually be the sort of linchpin that allows it to be that.
But here's the thing. There is no monopoly of Bitcoin on this technology. There are many, many cryptocurrencies, and there are newer ones that are more efficient than Bitcoin. So why is the first one going to be the one that sticks around? That is something that I don't understand. Like, why would all this value go into Bitcoin when it could go into any cryptocurrency with the same algorithm? I could make Bitcoin 2, I can make Bitcoin 3, I can make Bitcoin 4. So there really is no limited supply of cryptocurrency because anyone can make one. So this is the thing that I ask myself is, why Bitcoin? Why not something else? And we could just stick with that. But I also have another question about the fact that we all trust this algorithm that is controlled by no one and yet distributed, and the community, who's to say that will never break and that it will always work? So here you have all this value going into this Bitcoin algorithm created by an anonymous individual. And, we say it's decentralized, but doesn't look very decentralized to me. I'd love to talk about that. Why, you put, if everyone in the world puts a few percent of their net worth into Bitcoin, and somebody figures out how to break the algorithm or hack it, or perhaps a super intelligent AI comes along and somebody figures out how to manipulate this, like there's no guarantee that Bitcoin is the be all end all and that it will not eventually collapse for some reason. Like you just said, every fiat currency has collapsed, right?
Yep.
Why are we so confident that Bitcoin won't have massive problems that make it go to zero or at least less than $100,000?
I'm completely open to the idea that there are attack vectors on Bitcoin. I think we're pretty far past the government attack vectors, which have happened. I think we're probably pretty far past the copy and paste versions of Bitcoin being an attack vector for Bitcoin. It's pretty much withstood that. That's kind of the point you're raising about, well, what about Bitcoin Cash? What about Litecoin? What about Doge? These are all derivatives of Bitcoin, right?
Or just
These
Ethereum or any of these other cryptocurrencies
Sure.
that also act as a unit of account, a store of value, and a medium of exchange.
Right.
So like there is no cap on crypto. We can always make more crypto.
No, I don't think so.
I can make a new coin today and I could call it Blake coin and I could start distributing it. I mean, that's what people are doing all the time. Right? Why couldn't that become the dominant store of value if I convince enough people to use it?
If you had enough people using it and holding it, that's one thing. There's also Bitcoin's proof of work mechanism, right? The way
I can copy that too.
All of those productive, exactly. All of those you can, but you need miners. You need people to put capital, property, plant, and equipment into productive mining operations. You need technology companies like Bitmain and the other largest manufacturers of these ASIC chips to actually put capital and research and development into developing better chips. That market is, pretty well consolidated. I mean, 55 or so percent, I think it's about 55% Bitcoin dominance today. In the bear markets, Bitcoin is a little bit more dominant because people fly to crypto investors, at least go from Blake coin back into Bitcoin for relative safety. There's a lot behind Bitcoin. It's not tangible sort of aspect. Well, there's a lot of folks that have balance sheets that are committed to Bitcoin, whether they're miners or they're manufacturing equipment or they're like the network firm that's servicing the industry. A lot of people committed to it. So
right. So the fact that a large number of people and businesses have already invested in Bitcoin is theoretically what will support.
Well, it gives it some staying power. It gives it some stickiness, right? So I guess what I'm saying is, yes, people could hold Blake coin. People could even start mining Blake coin. And actually, people are doing that, right? Like what you see on Solana today, the Solana network would be a good example. There's the meme coin. We're now in the meme coin phase, right? And this is exactly what you can do. Anybody can click a couple buttons. They've got Blake coin. They've got Blake with hat coin, etc. Right? And these are very volatile and very fleeting. And why? Because there's definitely nothing behind them. There's the meme. It's a bit of fun. But for instance, would I, as a miner, sort of shift my whole business model, shift all of the capital that I've allocated into new coin? There are folks that do a segment of that, sure.
But I've already invested in the equipment, right? To mine another cryptocurrency is no big problem. I just put new software on my servers, right?
I think it can be a little more complicated than that. But yeah, if you're working on a proof of work algorithm and you've got ASIC miners, sure, you can go mine Dogecoin or you can go mine Litecoin.
Yeah, I can mine whatever I want, right? And that's what a lot of these miners are doing. They're diversifying.
Right.
And some of them are public companies, right? If I invested a lot of money in mining Bitcoin, I wouldn't want to just mine that, right?
I think you would. I mean, some of them are public companies too, right? And so their commitment to investors is about being a Bitcoin miner, right?
Yeah.
So that's the business model.
So I guess my question is like, what is the target? Like, why should Bitcoin be worth $200,000? Why should it be worth $1 million? Or is it going to go to infinity? Like that, I can't buy. Why would I buy an asset?
Price is a bit arbitrary, right? To me, like if I just think about personally, my sort of personal net worth, which isn't as high as I want it to be, it's actually all about relative. Like I don't care if Bitcoin is 100K, 250K, or 10K. What I care about is that the money that I invested into it is on a net and inflation adjusted basis better off than it was when I invested. So
So
it's a bit of an arbitrary thing about price, right?
Yeah. So I mean, my question is like, why what is there fundamentally about Bitcoin or any of these other cryptocurrencies that supports it going up above any other asset that I could buy for the long term? I could buy
Yeah.
real estate, and real estate has historically been the best place to put your money if you're wealthy, because
Mhm.
there definitely is a limited supply of it,
Mhm.
and it's a productive asset.
You can make it a rental. Yeah, you can make it a productive asset. There's some good tax rules around it. You get
Yeah,
some depreciation in there.
right.
Bitcoin definitely doesn't have a depreciation
So,
benefit or
just
yeah.
because Bitcoin's outperformed real estate over the last 10 years doesn't mean it will do it over the next 10, right? So, like, to me, the only reason to buy Bitcoin that I can think of is because I believe that some idiot's going to come along who will pay more for it than me right now. It's the greater fool theory.
Mhm.
I can't think of a better reason, and nobody can give me one to
Well,
say
everybody wants to buy
that.
real estate too, right? I mean, you buy location, location, location. Why? Why do you buy that location? If it's a rental property, because you're going to arguably
Yeah,
have a higher rental production during that rate, but also why?
people
Because
need a place to live. Right?
when
There's
you
a
sell
there's
that
a
asset,
there's a human need that people have to, like, live and to work and to do it in proximity to other people.
yes.
And this is like something that is likely not going to change. But, like, there is no human need to own a string of digits on a blockchain.
Yeah, my point there was that you don't buy just any real estate, right? You buy certain real estate because you think that over time it's still going to be a saleable asset, right? You still think that value is going to appreciate, i.e., there's a bigger fool willing to step into your shoes. So I
But
think
even
that
if
that's
there
kind of
isn't,
still
it will still make money, right? And that's what supports the value. Bitcoin is not a productive asset. So unless somebody else comes along in the future and is willing to pay more for it, there's nothing that will increase the value of what I have today.
right. And
Whereas if
that
I don't have to sell my real estate in order to make rental income from it forever.
right. Yeah, and I think that's one of the things with Bitcoin too is that yes, it's not a productive asset, but there are other commodities that aren't productive either necessarily, right? I mean, yes, gold, can it be used in manufacturing and chips? Yes, that's part of the gold market. Uh, the paper gold market, GLD, on the stock exchange, what is that? That's a speculative market. That's a ledger of
Right.
placeholders, right?
Right.
For speculation on gold. And so this is the nature of financialization in many regards. We've got crypto financialization and we've got standard financialization.
Right.
I haven't
Well,
convinced you.
you haven't convinced me, but I didn't come in
That's
here
okay.
expecting to be convinced. I mean, look, I think the reason to buy Bitcoin is actually pretty, I don't know, scary one, which is the crypto lobby is working to get the US government to establish a national Bitcoin reserve and wants to use taxpayer dollars to buy $5 billion of Bitcoin every year. And why would they do that? Well, when you get the government guaranteeing to buy Bitcoin at whatever the market price is, that is what drives up the price, and that's what keeps the price floor. But you wouldn't have to do that if there was really an actual, like, use for Bitcoin, other than for the thing we haven't talked about, which is like massive tax evasion, fraud, crime, which is like the primary use of Bitcoin as a medium of exchange, which is, hacking you and making you pay me in Bitcoin so it can't be traced, right? And like you said, people in other countries using Bitcoin to get their money out, like in China, right? I buy Bitcoin, I can get my money into a store of value that the Chinese government can't touch. But, like, those
Mhm.
are not like long term. It seems
As
to
a
be.
as a lover of
Yeah.
freedom, I think that actually an asset that's globally decentralized and allowing someone in a communist country with currency controls and privacy invasion and the inability to live a free life, what I would say is a free life, I think that's actually a pretty good use case. You threw some other things at me too, which are mostly sort of misconceptions about the space. Look, we are a professional services provider that works with the industry and works with players in the industry. So working with good players is what it's all about. And there
Mhm.
are many good players in the space. There are also bad players that give the space a bad rap. The idea that Bitcoin is largely used, or crypto generally is largely used for scams, fraud, etc., is not true. The national security report from our own government, right, shows it's the anti-money laundering report. I'm going to forget the exact name of it, right? But we see that actually in terms of money laundering violations, that crypto still makes up a very small portion of it, right? You said, oh, and they won't be able to trace it, right? Well, actually, that's one of the things, right? This is an immutable ledger. So if you want to launder money, if you want to perpetrate fraud, it's probably not actually the best place to do it, where you're going to leave an immutable trail behind of evidence. It's true that nation states use Bitcoin. It's true that North Korea has used crypto to finance terrorism and other efforts that are arguably adverse to the U.S. interests. It's true that ransomware the payments for ransomware have been paid in Bitcoin. These things are all true. It's also true that the FBI actually, in a large ransomware, I forget, it was the East Coast. I'm going to forget the exact case now, right? It was a utility, I think, on the East Coast. And in that case, the FBI was able to actually use this immutable ledger to trace down these payments in a way that's not possible with others, right? And we always have to compare. Everything is relative, right? So when we look at our traditional banking system, are we saying that this is a paragon? Are we saying that money laundering doesn't happen through our existing banking system, that human trafficking, terrorist financing, et cetera, doesn't happen through those rails? Well, it does. Actually, that's really where most of it happens. The vast majority still happens through our existing financial rails, right?
Sure. I'm bringing this up because when we talk about Bitcoin as a medium of exchange, people using it as money, it seems to be that, like, when people actually use it as money, it is most often involved in circumventing the traditional financial system for illegal purposes. And I agree with you. Like, it's great that it exists in these other countries where, people can't live free. But, like, to me, that is not the foundation of a stable, currency or store of value or anything like that. So, I'm not convinced of any other reason to buy Bitcoin other than for speculative purposes, I guess, is my point of view. And I know we don't have. I want to get back. I want to get to your practice and digital assets and talking about like that your practice. So I don't want to go on too much longer about this. But the one other thing I would love to discuss with you, which has been sticking in my head, is this idea of like decentralization. And this question I ask myself about whenever I engage in a transaction, right? I like to think, okay, I'm buying this thing. Why is the person selling it to me? I want to know what's the reason. So 10,000 wallets control over half of all the Bitcoin supply in the world. Do you agree with that? It's a small
I don't know
number.
that number off the top of my head, but would there be concentration in holding? Yes. Yeah, probably.
So I looked this up, I researched this on Perplexity. Something like 10,000 wallets control over half of the entire Bitcoin supply. It's a larger number that controls like the vast majority, but it's still not that many. And so, like, to me, I always wonder, like, well, why, if Bitcoin is constricting in supply, and if it will just go up, why would anyone ever sell it, right? Like, who are these people who are selling Bitcoin to all the new entrants into the market?
Okay,
and
so
why would they do it?
Okay, yes. So first off, the concentration of wallets, I think it's probably true that the distribution of holding of any financial asset is roughly going to map against the distribution of wealth, right? So we tend to have a pretty top-heavy wealth spectrum in the US, different countries, different levels, but generally speaking, you're going to map, those things are going to be rough proxies for each other, right? So whatever, the largest holders of Bitcoin are also probably very wealthy individuals. The other thing is, in other respects, the other thing is that the 16,000 or 10,000 wallets or whatever the number is a bit misleading because of the way that people interact with this digital asset world, which is essentially through middlemen. I'm going to pause here. You can point out the irony of the decentralized, get rid of the middleman system, relying on middlemen.
Well, and yeah, exactly.
But what
like
that
we
is
have this current financial system that is full of middlemen, and we're replacing it with another financial system that just is full of middlemen.
Right. And those middlemen here are exchanges, right? They are the key on-ramp and off-ramps. So they allow you to go on with cash and invest, and they allow you to sell and go off with cash, right? They're essentially like a securities brokerage with crypto, right? The way they hold the digital assets on behalf of the customers is in pooled or commingled wallets. And so if you do this sort of on-chain investigation, right, what you're going to see is, yeah, a lot of it, the vast majority of these assets is going to sit at exchanges. And so that's why that number is a bit misleading. I think it's probably a little bit more distributed than that.
Yeah.
But
well, the reason I bring it up is because what I picture is the Winklevoss twins who bought Bitcoin when it was like $1 and own billions and billions of dollars of it.
Yeah.
Very happily selling it to new entrants. And what's happening is that as the price goes up, those folks are slowly selling down their holdings. And the end result will be, especially if the government gets involved into buying Bitcoin, is that taxpayers will enrich millionaires and billionaires, who are most of the people who hold Bitcoin and bought it at its like very low original cost. And then
this brings up a really interesting point. I see all sides of this. I'm not sort of like a blind subscriber to all of the crypto ideas. I do believe in a lot of pieces of the space. The question about taxpayers subsidizing or sort of being exit liquidity, as we would call it, for millionaires and billionaires or for early entrants into Bitcoin.
Who are now millionaires and billionaires as a result.
Yeah, I mean, to me, what I would say is the other side of that equation, or the way to say that a little bit differently, would be that some taxpayer assets will be used to buy into a hard money asset, right? To buy into something that is inflation protective, is good for national security, is good for global dollar dominance, is good for our market. And so would that be a good way to use taxpayer funds? I think in some, again, sort of balanced proportion, maybe that's arguably a good thing. The Winklevi twins, I don't know if they're selling their Bitcoin per se. I know that they've created a New York business called Gemini. I know that they employ hundreds or maybe well over 1,000 people now. I know that they pay taxes based on their business activity. Generally speaking, I don't do their taxes, right? But assume that there's some productive benefit to our economy. And so I think this is one of the areas that's a trap when we talk about Bitcoin and digital assets is, yes, are there negatives? Are there ways to frame it that could be, taxpayers or exit liquidity for billionaires? Sorry, newsflash. I think a lot of us taxpayers are exit liquidity for billionaires in many respects outside of crypto. But aside from that, like, should we let this go offshore? Because it is inevitable. It is inevitable that people will continue to invest in digital assets. It's also inevitable that the technology underpinning digital assets, the blockchain technology, specifically public blockchains, will allow for tokenization of actually real world assets, right? So now we talk about financialization, where you can talk about buying that productive property asset in a tokenized form. This is inevitable because it's better, faster, and more transparent. And just like we went from, stocks on paper and wheelbarrows, across New York from the trading floor to DTCC or whatever, and we went to a digital ledger for the securities brokerages, the same thing will happen with real world assets, right? Whether it's art, other commodities, precious metals, real estate, etc. Like, a lot of this still has to be built, but that's going to happen. So should we let all that go offshore? Should that not accrue to the benefit of U.S. companies and U.S. taxpayers in terms of the development of IP and personal wealth? I think it should. And I think that if we only talk about one side of it, we might do what we've done for the past 4 years, which actually a lot of good things happened in the past 4 years. But one of the bad things was essentially saying, hey, all of this potential innovation in digital assets, all this financial innovation that could accrue to our benefit, we don't want it. We don't want it. We want to stomp it out. And so a lot of companies moved offshore.
Mm-hmm. Blockchain is a great technology. It's an incredible technology. It's like one of the most transformative technologies that we've ever seen, right? A distributed way of exchanging value and assets and tracking that.
The biggest accounting innovation, it sends double entry
shared,
accounting.
Right? Shared distributed ledgers, right? Yeah. But like doing that with real world assets is one thing, because there's an actual asset. There is a physical asset there's some sort of asset that we're actually storing value with, as opposed to like just a literal string of digits, which represents nothing other than itself.
Most cryptocurrencies probably go to zero. Bitcoin arguably has some qualities and some market stickiness and some participation that keeps it from going to zero.
Okay, that's interesting you say that. You say most cryptocurrencies go to zero.
Yeah, I think that most cryptocurrencies become gas for this other system. They become the lifeblood, sort of the currency. We call it gas, right? Transaction fees in crypto is called gas when you send on chain on Ethereum. So it becomes the way to fuel transactions in these other tokenized assets or real world tokenized assets. I think largely that's what happens in the long frame. And I think that if Bitcoin maintains its sort of store of value, old and slow and simple technology, I think it has the potential to maintain that spot, at least in the crypto landscape. Yeah.
So I think that's where I have a slightly different viewpoint, which is, why would it be Bitcoin? And why would it not be some other cryptocurrency that ends up being the currency? And so that's the risk you're taking when you invest in Bitcoin, is you're betting that this is going to stay dominant. But how often in human history has the very first application of a technology ended up being the dominant one? You know, Facebook wasn't the first social media platform, right? Apple didn't.
But it did end up being the dominant one.
It ended up being the dominant one, but it wasn't the first one, right?
Well, you're right. Sorry, what was it? MySpace? Yeah.
MySpace and like some other ones. There were like 12, I think, social media platforms that got big before Facebook. And so like that is my thing. Like I can see investing in crypto broadly. I can see investing in like a broad portfolio of cryptocurrencies, but like I just can't stomach the idea of everybody's 401k getting invested into Bitcoin. You know, I just like to say that this is unhackable. When in human history has anything been unhackable?
I don't think anyone's whole retirement should be invested in Bitcoin. Hopefully I made it clear.
But that, even like
diversified approach. But if it's a public mutual fund,
the hope of the crypto people and the Bitcoin people is like, we want 3 to 4% of everybody's money in Bitcoin someday, right? That's how you keep the value going up.
Well, I think one of the signals of demand is, if everybody in crypto wanted that, but nobody with institutional brokerage accounts or people that couldn't otherwise easily access Bitcoin wanted it, it wouldn't happen, right? Fidelity has done this because they have customer demand for it. So others have done it because they have customer demand. The Bitcoin ETF issuers have done it because they think there's a public market there for them of institutions, right, that need that level of access.
Yeah, they're creating products for people to buy.
Yes.
But the demand, what is supporting the demand, feels to me like FOMO more than anything. And to me, that is like the definition of a speculative asset. And I just think back to the housing crisis. And maybe that is sticking in my head because I graduated from college. I think we're around the same age, Noah, I'm guessing. Like I graduated from college like in the middle of it. And it really messed up my my start in the American economy. And what was that ultimately, right? It was a speculative bubble.
Driven by particularly interesting financialization and creation of products of bundled mortgages, right? Where improperly rated and all that. Yeah.
And what is starting to happen right now is the crypto bros have teamed up with the finance bros to create these products, to get people's retirement accounts, to get CalPERS and everyone buying this asset. And that just looks to me like, hey, we're repeating the same mistakes of the past.
I think at the institutional level, I don't think it's all necessarily doom and gloom. I won't speak to the teaming up piece, but I do think that, right, if you think about an institution holding an asset in a fiduciary way, right, and fiduciary responsibilities, are they going to ride it to zero? No, I think they've got some stop loss measures in there. So I don't think that we need to worry so much about a 2% allocation, being sort of the end of retirement. So
Noah, I have used up all of our time on this
You
question about
did.
Bitcoin, and like I owe you one,
It's all good.
because, well, I've really enjoyed this. Like I hope I hope I didn't disappoint any of our live stream viewers
I wish
because
I
it
came more
totally
prepared. I wish I
changed
was
the.
ready for a Bitcoin debate.
No, I mean, you are prepared. And I mean, this is like you've been able to answer these questions for me better than anyone, honestly. So I really appreciate it. And I would love to do another round with you and actually talk about what we were supposed to talk about.
Sounds
If
good.
you're up for it. And we will retitle this episode to something like, a great Bitcoin debate or something like that.
I would love to do another one because I think what
Okay.
we do is interesting, right? We're definitely interfacing a new, crazy fast moving space, but there's a ton of opportunity for accountants in this space. I do believe personally there's some inevitability to this. That tokenization of real world asset piece, I
Yes.
think is real, and I think that our thesis is really kind of like, hey, all assets become digital assets in some shape or fashion, right? Just like I said about sort of stocks, right? Going
Yep.
digital, just like we used to light cities with whale oil lamps, right? It was
Yep.
inevitable that with technology we did something different. And so I think that cuts across all industries. That's going to touch all CPAs, accountants, and consultants in one way or another. And so I still think you could be an early entrant here. You could find a bigger fool to step into your shoes, right?
Well, thankfully, all of my personal wealth is invested into building Earmark. So I'm just going to have to hope that it can grow faster than Bitcoin. Otherwise, I'm wasting my time. I'm working so hard. I
Yeah,
could just buy Bitcoin and watch it go to the moon. But
exactly. I'm
I'm going to
invested
be.
in TNF, so I feel your position there.
Thank you, everyone who joined us live. Noah, how about just tell us a bit about your firm? What you do. Like, what is the network firm?
Yeah.
What do you
Sure. Yeah.
specialize in? Yeah.
Can try and take us out with that. Yeah, sure. Yeah. So we do. I think we're actually the first, definitely the largest today, 100% focused digital asset CPA firm. We're unique in a couple regards. So sure, we do a number of things that larger accounting firms do. We're also a startup business, so we don't do all of them, but we're expanding services, right? So we address our services directly to the digital asset space. And again, I said it's about working with good players. The kind of the typical clients we work with are exchanges. Some of them are crypto startups. We work with Bitcoin miners, sort of productive businesses in the industry. And we're unique in a couple of ways. One, in our structure, we're formed as an alternative practice structure, which I definitely want to talk more about. It's become a common theme in the industry. We're hearing more about it. In terms of firms being able to sort of shift their ownership model, take private equity money. And this is really driven by the need for accounting firms to be acquisitive, but they have to be acquisitive with cash because partnership equity is no longer the currency that does it in acquisitions necessarily. And so I saw that model, I learned about it, and I thought, wow, we're starting a firm at the beginning of 2023. I thought, this is actually an amazing thing to start with from the ground up because I don't need private equity money. I'm not interested in that. What I'm interested in is employee ownership and participation in the business to drive, and incentivize talent and to create an upside for people, sort of break the traditional mold. And so that's one way we're unique. The other way we're unique is over the years, we've developed all these tools, frankly, to get this work done. Doing crypto audits, seeing it on the balance sheet in an audit scenario, not easy. Got to run your own node. You start with that. Then you got to index your own node. Then you got to figure out all this stuff. And then you got to do it for many chains. So we built all these tools. And so we're also kind of a hybrid software firm. And so we've got a product called LedgerLens. It's actually the first and only crypto tool for auditors to get through financial statement audits and other attest engagements. Block Explorer on steroids might be one way you could think of it if you have heard about Block Explorers. And that's kind of the firm in a nutshell. We're 25 plus people, growing, and frankly having a lot of fun because it is a very interesting space to be in.
That's awesome. And that is really important work you're doing because when I believe it is inevitable, when blockchain ends up being how we transact when it comes to real world assets and digital assets other than cryptocurrency, that is going to be super important, is auditing all of that and doing that with technology and software. And so that's the future. So Noah, I'm going to get you on again real soon, and we're going to talk about that and your firm and specialization in digital assets and all the stuff that is we promised to talk about today and didn't get to because you very kindly
I
went with me
indulged
on
you.
you indulged
But
me, and I thank you.
I want to come back, but
Okay.
you have to promise me you're not going to pick a dip in Bitcoin to bring me back. You're not going to opportunistically bring me back during the crypto winter and then beat up on me, are you?
I mean, I'll get you in here before Trump takes office, and so like we know
All right.
it's not going to dip before then.
Exactly.
Right? Okay, cool.
I think
I
you're
hope you
right.
have some time over the break, the holiday break, and we can do it.
We can do that. All right.
Awesome.
Cheers, Blake, and thanks for everyone for joining.
Thanks, Noah. Thank you, everyone who joined. Stay tuned for a brief message about how to earn CPE for joining us today or listening to this on demand. Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.